Nvidia is the most powerful AI company on the planet because they make the most powerful AI chips on the planet. Almost every AI service runs on Nvidia's infrastructure today. But after announcing a 10-for-1 stock split on one of the best earnings calls in recent market history, Nvidia stock blew past $1,000 per share. And whenever I see that kind of growth, there's really only one question left to ask. Is this finally the top for Nvidia stock? Or are their best days still to come? Your time is valuable, so let's get right into it. First things first, I'm not here to waste your time. Here's everything I'm going to talk about up front. I'll walk you through Nvidia's insane earnings results, focusing on data centers. I'll highlight their current product roadmap, including the next chip after Blackwell. I'll talk about Nvidia's biggest risks right now, like their competition and supply constraints, and of course what I'm doing with my Nvidia stock as a result, especially with a 10-for-1 stock split on the horizon. Alright, let's dive right into Nvidia's earnings. Nvidia posted record revenues of $26 billion for the quarter, which is 18% higher than their most recent record-breaking quarter and up by an insane 262% year over year. Nvidia also posted earnings per share of $6.12, which is 10% higher than analysts expected and 7.5 times higher than a year ago. Things get even crazier when we look at Nvidia's data center revenues, which now account for 86% of their total revenues today, up from about 60% of their total revenues just 1 year ago. Nvidia's data center revenues came in at just over $22.5 billion, which is an increase of 22% quarter over quarter and an insane 427% year over year. That means Nvidia is now on pace to make $100 billion in AI accelerator revenues this year alone, while AMD is guiding for around $4 or $5 billion, and Intel is, well, I'm just kidding. I'll cover Nvidia's competition later in the video, but there is something important that you should know about these crazy year-over-year numbers. I know it's hard to imagine, but Nvidia was actually struggling pretty badly a year ago. If we look at their revenues by business unit, we can see that their gaming business, which was their biggest business unit at the time, was in freefall. I don't just cover the good parts of my investments, so I made videos talking about the issues with Nvidia's consumer GPUs, the overall weakness in the PC market, and the resulting collapse of their gaming segment as they went all in on data centers in quarters 2 and 3 of last year. A collapse that Nvidia's gaming segment still hasn't fully recovered from, while their data center revenues have more than 5x'd. My point is, these low numbers from a year ago really help make Nvidia's growth look unbelievably good today. But since their insane growth started 4 quarters ago now, we should expect Nvidia's year-over-year growth to start slowing down as early as their next earnings call, where the comps will be against much better quarters. So don't say I didn't warn you 3 months from now. Nvidia also reported gross margins of 78.4%. For reference, a software as a service company typically has gross margins between 70 and 85%, so Nvidia is making software-like margins on their hardware right now. But this is what happens when one company dominates the single fastest growing market on the planet. Nvidia's gross margins are up 2.5 points quarter over quarter and a whopping 14 points year over year. See what I mean about these year over year numbers? This crazy growth is why Nvidia stock is actually cheaper today than it was a year ago. Wait, the stock is cheaper now, even though it's near all-time highs? Let me show you what I'm talking about. Nvidia's stock price is up by around 180% over the past year, but their earnings per share rose by 650%, which means Nvidia's price to earnings ratio is around 3 times lower today than it was a year ago. In fact, Nvidia stock is trading right around its 5-year average price to earnings ratio, even though it's growing much faster today and has much higher margins. Now you know why Nvidia stock is actually cheaper today, even though it's at all-time highs. You probably also know that VPNs protect you and your online data by encrypting it and making it look like you're somewhere else. But did you know that VPNs can also save you a ton of money? That's where Surfshark comes in, the sponsor of this video. Surfshark is a super fast and easy to use VPN that you can install on unlimited devices with one account, which means you can protect yourself and your entire family. And since VPNs change your digital location, you can also use Surfshark to access websites, content, and services that are blocked in your region. Even better, some online stores raise their prices based on your location, so you can use Surfshark to always get the best price on big ticket items like plane tickets, hotel rooms, and rental cars. So if you care about your family's privacy and you like saving money, you can use my code TICKER to get up to 4 extra months for free. And Surfshark offers a 30-day money-back guarantee, so there's no risk in trying it with my link in the description below today. And a big thank you to Surfshark and to you for supporting the channel. Alright, so far we've looked at Nvidia's top and bottom lines, their year-over-year growth, and why the stock is cheaper today despite trading at all-time highs. Let's dive into their product roadmap next, since that's the real science behind this stock. Last year, Nvidia accelerated their hardware release cycle from every 2 years, like they had between the A100 and H100 data center GPUs, down to 1 year between the H100, the H200, and now Blackwell, which ships at the end of this year. If you want to know where we are on this roadmap right now, Jensen just hand-delivered the world's first DGX H200 system to OpenAI this past April. As you can see, Nvidia has another yet-to-be-named chip planned for release in 2025, along with big upgrades to their Quantum InfiniBand and Spectrum-X Ethernet networking solutions. I'm showing you this today because during this past earnings call, Jensen confirmed that Nvidia is now fully on that 1-year rhythm. He announced that there will indeed be another chip after Blackwell, and that Nvidia will release a whole set of Ethernet-based networking solutions. What that means for investors is that Nvidia's total addressable market is growing massively, since Ethernet-based data centers can now have their cake and eat it too. They can deploy Nvidia's hardware without having to switch to InfiniBand. Here's what Nvidia's Chief Financial Officer Colette Kress said during the earnings call. In the first quarter, we started shipping our new Spectrum-X Ethernet networking solution optimized for AI from the ground up. It includes our Spectrum 4 switch, Bluefield 3 DPU, and new software technologies to overcome the challenges of AI on Ethernet to deliver 1.6x higher networking performance for AI processing compared with traditional Ethernet. Spectrum-X is ramping in volume with multiple customers, including a massive 100,000 GPU cluster. Spectrum-X opens a brand new market to NVIDIA networking and enables Ethernet-only data centers to accommodate large-scale AI. We expect Spectrum-X to jump to a multi-billion-dollar product line within a year. But the real moneymaker isn't this next GPU or even these Ethernet offerings. It's how they all fit together, which is this GX200 NVL at the very top of this roadmap. And to understand why, we need to talk about Blackwell, since Nvidia will start shipping it at the end of this year. If you've been watching this channel for a while, you know that I focus on investing in technology platforms that other businesses pay to build on top of. Blackwell isn't just a GPU, it's an accelerated computing platform, and chips based on the Blackwell architecture are going to go in self-driving cars, machines in factories, humanoid robots, and of course, inside data centers and supercomputers. And just like Hopper, Blackwell has two variants, the B100 and the B200. The B100 is a drop-in replacement for the H100, meaning data centers and supercomputers can swap out one H100 tray and put a B100 tray in its place. So Blackwell won't have a hard time ramping up in sales since the infrastructure to support it is already deployed anywhere there's an H100 today. The B200 is the state-of-the-art Blackwell chip, just like the H200 is for the Hopper generation. Blackwell has much higher performance per watt compared to Hopper, and since power is often a bottleneck for data center operations, they're going to want to phase in more Blackwell chips over time. In fact, Blackwell is 4 times better at AI training and a whopping 30 times better at AI inference, which is what gives Nvidia so much pricing power over their competitors and why their margins are still currently so high. The next level on this roadmap is the GB200 Superchip, which is what Jensen is holding in his left hand during the Nvidia GTC keynote, while he casually holds the $10 billion prototype board in his right.
This is a fully functioning board, and I'll just be careful here. This right here is, I don't know, $10 billion?
Yeah, I totally would have dropped that. Anyway, the GB200 Superchip connects 2 B200 GPUs and 1 Grace CPU, and this connection is important. They're currently connected via NVLink, which has up to 900 gigabytes per second of bandwidth. That's fast enough to move 150 feature-length 4K movies between chips every single second. But soon, these AI chips could be connected by Spectrum 4 Ethernet switches instead, like Nvidia's CFO mentioned on the call. Whether these chips are connected by NVLink or Spectrum 4 switches, 2 GB200 Grace Blackwell superchips go into one Blackwell compute node, which is one tray in an AI data center rack. Colette Kress also mentioned these Bluefield DPUs, or data processing units, on the earnings call. DPUs handle most of the networking workloads so that the system's CPUs and GPUs don't have to. 18 of these compute trays go into one GB200 NVL72 system. It's called that because the GB200 superchip has 2 Blackwell GPUs. There are 2 superchips per compute node, and there are 18 nodes per system, all connected via NVLink. 2 times 2 times 18 equals 72 Blackwell GPUs connected by NVLink, hence GB200 NVL72. Now stick with me because we're almost home. Sandwiched between the 18 compute nodes are 9 NVLink switch trays, with 2 NVLink chips each, connecting 4 Blackwell GPUs. So 4 ports per NVLink chip, times 2 chips per tray, times 9 trays is also 72 ports, supporting all-to-all GPU communications at a mind-boggling 130 terabytes per second of bandwidth.
That's the DGX NVLink spine. 130 terabytes per second goes to the back of that chassis. That is more than the aggregate bandwidth of the internet. We could basically send everything to everybody within a second.
More bandwidth than the entire internet. Now you understand why Nvidia doesn't have any competition and why being able to support Ethernet-based data centers is such a big deal. The 18 compute trays and the 9 NVLink switch trays come together to form the GB200 NVL72 system. But that's just one rack in an AI factory. This one rack has 1.4 exaflops of AI training performance. And just to be clear, there are only a few exaflop supercomputers on Earth today, and Nvidia just built one in a single 120 kilowatt rack. And at the top of each single rack supercomputers exists a single networking tray to connect multiple racks together. Today that switch tray uses InfiniBand, but soon it will be offered in Ethernet as well. Alright, now that you understand the different parts of the Blackwell platform, the B100 and B200 GPUs, the Grace CPU, the GB200 superchip that connects them, the NVLink or Spectrum 4 chip-to-chip connections, and either InfiniBand or Spectrum X to connect the racks, you also understand that Jensen announced way more than one new chip on this past earnings call. This new GPU will also have a new Grace X superchip, new chip-to-chip switches, and new networking solutions to connect the racks together. And just like the B100 trays are drop-in replacements to the H100 trays, it seems reasonable to expect that the next one will have a drop-in replacement version as well. So as more data centers buy Hopper or Blackwell systems, they're already on the upgrade path to this next GPU platform over time. I know we spent a lot of time covering Nvidia's data center systems, but remember, they account for 86% of Nvidia's total revenues today. So you just saw most of the science behind the stock, at least by revenue. I haven't even touched the software side of things, which I'll cover in a separate video. Now let's talk about the risks, the 10-for-1 stock split, and what the heck I'm doing with all this information since Nvidia is my biggest position by a pretty big margin at this point. And if you feel I've earned it, consider hitting the like button and subscribing to the channel. That really helps me out and it lets me know to put out more deep dives like this. Thanks, and with that out of the way, let's talk about the risks to holding Nvidia stock, which, surprise surprise, really means the risks to their data center business. Let's start with their competition. Nvidia has 2 kinds of competition: chip makers like AMD and Intel, and hyperscalers that make their own chips, Amazon, Microsoft, and Google. But here's the thing, when most people buy a car or a phone, they only own one at a time. So every sale for one brand is a missed customer for the others. Tesla versus GM, Apple versus Samsung. Data centers don't work like that. When Microsoft buys a GPU from AMD or uses their homegrown accelerators, that's not one less sale for Nvidia, because data centers need to handle a wide variety of workloads. As a result, data centers are actually portfolios of different hardware and software solutions designed to meet their customers' needs. As demand for a specific kind of workload grows, cloud service providers will buy more of the right hardware and software to support it. But in the end, data center operators are always trying to deploy the right mix of systems to optimize their costs. Most workloads still don't involve AI today, which means Nvidia's systems would be total overkill. So data centers will buy chips from AMD and Intel for certain tasks. They'll build and use their own chips for others, and use Nvidia systems for heavy-duty training and inference applications. And make no mistake, inference is becoming a heavy-duty AI application, as the industry moves from predicting the next word in a sentence to generating frames of videos or structures for novel proteins. So Nvidia's quote-unquote competition might be able to handle inference when it comes to large language models, but their performance remains to be seen for text-to-video models like OpenAI Sora, or protein folding models like AlphaFold 3 by Google DeepMind. One of the other big talking points that AMD and Intel had was their support for Ethernet, while Nvidia uses InfiniBand. But as you just saw, Nvidia is rolling out Ethernet-based solutions as well, which cuts into AMD and Intel's piece of the pie, not the other way around. That means worries about decreasing demand are equally misplaced. The market for AI infrastructure is expanding as the world moves from retrieval-based workloads, like delivering you to a pre-made piece of content, to generative workloads like creating an answer, or a website, or a video, or a protein, or a robot's next move based on your exact query and your exact preferences. So inference workloads will keep needing more and more powerful chips as they keep getting more complex. Nvidia made it clear on the earnings call that demand for their Hopper GPUs went up after Blackwell was announced, not down. And I've shared chart after chart in video after video showing how crazy fast industry analysts and experts are expecting the AI market to grow for the rest of this decade and beyond. And that just leaves us with Nvidia's supply constraints. As long as Nvidia makes such huge leaps in compute power, they're always going to be supply constrained. That's the risk with making something that every business wants. While wait times for the H100 eventually went down from over a year to just a few months, Nvidia is currently supply limited on the H200, and even though Blackwell is now in full production, demand could exceed supply well into 2025. And by the time those wait times come down, I expect their new chip to be supply constrained as well. The truth is, I'd rather see Nvidia run out of supply than run out of demand. And I know they're working closely with TSMC and the rest of their suppliers to meet as much of that demand as possible. When it comes to their supply constraints, at this point, I think Nvidia's leadership has earned my trust and my money. Speaking of which, here's what I'm doing now that there's a 10-for-1 stock split on the horizon. In theory, stock splits shouldn't matter. Nvidia will have 10 times the shares at 1/10 the price, and that's that. But in reality, studies show that companies that announce stock splits tend to rise by an average of 25% over the next year, versus about 12% for the rest of the S&P 500. One of the big reasons for that outperformance is that many brokerages outside the US still don't offer fractional shares. So Nvidia's share price going from $1,000 to $100 lowers the barrier of entry tenfold for those investors. Another thing that Nvidia's stock split might enable is their inclusion in the Dow Jones Industrial Average, which is a price-weighted index, not market cap, but stock price. The Dow Jones tracks 30 large-cap companies that account for a significant portion of US economic activity. It currently includes companies like Microsoft, Salesforce, Apple, Amazon, and Intel. In my opinion, Nvidia is a great candidate for this index, which means Nvidia does stand to materially gain from this stock split, which takes place on Friday, June 7th. Between that, confirmation of their next chip after Blackwell, Nvidia rolling out Ethernet-based networking solutions, and their price-to-earnings ratio falling over time, I'm going to keep buying Nvidia stock to get rich without getting lucky. So, congratulations to my fellow Nvidia shareholders, and thanks for watching. Until next time, this is ticker symbol U. My name is Alex, reminding you that the best investment you can make is in you.